It's now time to bring you the latest from the world of business as the International Monetary Fund says it will significantly reduce its forecast for global economic growth in its next update. IMF's Director for Strategy, Policy and Review, Celia Pazabasioglu, who made this known, disclosed that the IMF's World Economic Outlook report, expected to be released on the 26th of this month, will downgrade its forecast substantially as part of the global response to surging inflation and recessionary fears. Now, Mrs. Pazapasioglu also says that the surge in food and energy prices, slowing capital flows to emerging markets, the COVID-19 pandemic, along with a slowdown in China, has made it much more challenging for policymakers to work out an effective economic strategy. In its latest report, the IMF downgraded its outlook for global growth for this year to 3.6%, but upgraded Nigeria's economic growth rate. And now, in a related development, following the recent increase in the monetary policy rate to 13%, the prime lending rate in the banking sector reached 12.29% in June this year, recording the highest in 17 months. Prime lending rates are the interest rate that commercial banks charge their customers, generally large corporations, and according to a report from the Central Bank of Nigeria, maximum lending rate dropped to 27.37%. That's about a 0.42 basis points decline from the 27.79% it had earlier recorded in April this year. The report also shows that the interest on saving deposit as of last month hit the highest level of 1.38% as of June this year from 1.37% reported in the month of May. Now, the interest on saving deposit opened the year at 1.25%, gaining 0.12 percentage points on a year-on-year basis from the 1.81% reported in June last year. Now, recall that the CBN increased the MPR, which is the monetary policy rate, to 13% in response to the global inflationary pressures, which continue to linger and has continued to hurt economies around the world. In the currency market now, the value of the Naira weakened to 430 Naira to the dollar at the investors and exporters window at the end of business last week, even as the Nigerian reserves gained slight momentum. The nation's foreign reserves rose by $75 million during the week to hit $39.43 billion on the 14th of this month. Now, in the parallel market, the value of the Naira likewise weakened to 618 Naira, which is a further depreciation from the 616 it had earlier recorded in the previous week. Meanwhile, at the importers and exporters window, the value of the local currency depreciated as the turnover at the market dropped. The dollar has continued to record significant shortages, which are limiting foreign exchange supply at the official channels amid increased forex demand, underpinning summer travels and also political activities. And now, shifting focus to the international front, share markets rallied today following a much-needed bounce in Wall Street, though nerves are stretched ahead of a near-certain interest rate hike in Europe and another round of corporate earning reports. Markets are also hanging on details of an anti-fragmentation tool intended to ease pressure on borrowing costs for the union's most indebted members. Investors found some relief in Friday's rally in Wall Street, and MSCI's broadest index of Asia-Pacific shares outside Japan added 1.4%, having shed 3.5% just last week. Japan's Nikkei was closed for a holiday, and futures traded at about 27,130 compared to a cash close of 26,788, while South Korea's Kospi gained 1.7%. Chinese blue chips, the CSI 300 index, also added 1%, though Shanghai announced more district-wide coronavirus testings. S&P 500 futures edged up 0.4%, while Nasdaq futures also firmed up 0.7%. The Euro Stoxx 50 futures also rose 0.6%, and London's FTSE futures also gained 0.4%. And now, in this next report, Chinese regulators stepped up efforts to encourage lenders to extend loans to qualified real estate projects as beleaguered property sector faces fresh risks from a widening mortgage payment boycott on unfinished houses. The China Banking and Insurance Regulatory Commission, that's the CBIRC, told official industry newspaper earlier on Sunday that banks should meet developers' financing needs where reasonable. The agency has also so far expressed confidence that with concerted efforts, all the difficulties and problems will be properly solved. The remarks come as a growing number of home buyers across China threaten to stop making the mortgage payment for stored property products, aggravating a real estate crisis that has already hit the Chinese economy. And now in the energy market, Canada has sent a turbine for the Nord Stream gas pipeline to Germany by plane. This was early on Sunday after repair work had been completed. That's according to Commercant newspaper reports today. It will take another 5 to 7 days for the turbine to reach Russia if there are no problems with logistics and customs. And now wrapping up business news, it is our oil prices on the international market extended gains today, propped up by a weaker dollar and tight supplies that offset concerns about recession and the prospect of widespread COVID-19 lockdowns in China again, reducing fuel demand. U.S. West Texas Intermediate crude recorded a price surge of 2.83% to sell at $100.30 per barrel. Brent crude now sells at $104.20 per barrel, registering an upward price margin of 3.02%. Bonelite's performance is starting the week in the red territory with a price decline of 9.9%, selling at $118.10 per barrel. And for the OPEC basket, crude oil dealers offer $102.70 per barrel with a price drop of 1.68%.